Hi everyone, good afternoon. You're watching Market Fatafat on ET. Now I'm Mubina Kapasi. Markets not exactly impressed, like we said, with that 25 bips rate cut. The Nifty has taken a U-turn of sorts and it has slipped deep into the red. In fact, as we speak, it's actually trading at the day's low, sharply off 11,400 that we started the day off with. So it's almost a more than 170-point cut that we have witnessed on an intraday basis. The Sensex as well is losing, and how? Triple-digit cuts, obviously, but the extent, of course, of that has accelerated. It's now 260 points of a decline that we are seeing on the Sensex. Broader markets declining in tandem, 100 points knocked off the mid-cap index, the small-cap index losing 0.5%. And, if you look at the advanced decline ratio, we literally have around maybe 15 odd stocks that are in the green. Cipla, M&M, Tech Mahindra, Hindalco, these are some of the gainers. But on the flip side, banking seems to be the big theme of losers. So Kotak, HDFC, ICICI and Axis. All these four private banking names, Yes Bank too, of course, 5 of them are in the red among the top Nifty losers. We also do have a Grasim and Ultratech from the Aditya Birla stable that are among the big losers, 3% gone for each of them. And then you have continued losses in Coal India. BPCL snapping that gaining streak is as well now in the red, 2.4% gone. Interestingly, in the metal space, we do have Hindalco that's managed to take a U-turn, as has Vedanta. They were among the top Nifty losers, but now they're standing out. But JSW Steel has failed to participate in the sort of resilience that the metal space is showing. So all in all, if we have to summarize the sectoral action, it's IT and auto that is standing out. Auto, once again, couldn't say it's gaining smartly, but yes, it is absolutely flat with a positive bias. But banking, that's really the big culprit. In fact, let's pull up the Nifty Bank and see what exactly has happened during the day, especially after the RBI governor has cut the repo rate by 25 bips. And you can see it's been a sharp dip down. And that's really been the trend in the last 2 odd hours since the policy announcement. It's really been one-way journey downwards for the Nifty Bank. 27,700 now for this one. And the Nifty PSU banking index, that's really a big loser. It looks like this time around, though, the private banks are losing more than the PSBs. A big fall. And the banking space really is something that is taking along with it the market lower too. But speaking more about the RBI's policy, what were the key highlights? Well, interestingly, apart from the 25 bips rate cut, remember, there's a 5th rate cut, consecutive rate cut that has come about, 110 bips and another 25 bips. So in total, it's almost 135 bips for the last 1 odd year. The stance obviously is accommodative, and most importantly, the GDP estimate for FY20 has been slashed from 6.9% to 6.1%. That's just a little shy of that 6% mark. Remember that last time around, we did have the GDP estimates being slashed by, I think, around 30 basis points. And now, of course, after that 5% GDP number for the second quarter, this time around, the RBI has further cut the GDP growth rate. For the next quarter, it could be at 6.6, and the quarter after that 7.2, so that will bring the total GDP for FY20 at around 6.1% according to their calculations. The risks for GDP and CPI are evenly balanced according to them, and most importantly, they say that there is surplus liquidity in August and September. But let's go across to Ruchi Bhatia, who is in conversation with SS Mallikarjun Rao, the MD of Punjab National Bank.
Well, that was, of course, the RBI monetary policy, a 25 basis point rate cut coming in. Joining us to talk about that on the phone line with us, the new MD and CEO of Punjab National Bank, Mr. SS Mallikarjuna Rao, is joining us. So thanks for taking your time out and speaking to us at ET now. A 25 basis point rate cut coming in. And this means that from the start of this year up until now, the RBI has gone ahead with a 135 basis point rate cut. Do you think this is enough to give the much needed push for the economy? What's your own assessment of the kind of commentary that has come in from the RBI this time around?
Definitely it is sufficient. The reason being, last time when the RBI has reduced successfully in the credit policy, since the transmission has not taken place in the same lines, RBI intended for banks to go for the repo-based linkage advances. accordingly, particularly in the retail segment. Accordingly, from 1st October onwards, all the public sector banks have gone for repo linkage in terms of the retail as well as MSE segment, that is micro and small segment. As a result, the what you call percolation down the line in terms of the repo rate linked advances interest rate will take some time to go down. Now already again RBI has reduced 25 basis points, so automatically the reduction will take place in those kind of an advances. As a result, the impact will slowly percolate into the system.
Right.
And what RBI has done is a good thing by cutting 25 basis points, so that what we declared as on 1st of October will further get reduced when we do the resetting of the advances where the repo linkage is there.
Right.
So in my viewpoint, at this point of time, this is good enough wherein the percolation will take place more effectively.
Right. You know, that's a very valid point. And the banks so far have been criticized for not, transmitting the rate cuts fully. So help us understand, are you telling us that for all kind of customers, for all kind of loan seekers, you will, be transmitting the rate cuts almost immediately over the next few weeks?
Understand, the bank's balance sheets are not defined by the repo rate. It is actually defined by the interest rates on deposits.
Totally.
As a result, if you have looked at in the last 1 year, when the even though repo rate cut has happened very deeply, the similar amount of cut you could not see in the bank's MCLR lending. There was a concern at the government as well as at the RBI. That is the reason why they have indicated that at least the retail and MSE segment should be linked to repo rate, so that the transmission takes place automatically and simultaneously. Now, with respect to coming to other advances, if you look at large corporate segment, already they demand, because of the demand in the market, for a lower MCLR lending. So if you expect that banker will have to link all the advances to repo rate, it is not possible. The reason being, the interest rates are not defined based on the repo.
True.
Repo window is available only to the extent of 2% of the NDTL of the banks. So we are largely dependent on the interest rates on deposits. In that context, the statement given by RBI governor indicating that if there is a need for managing the liquidity, RBI would not hesitate to intervene so that the transmission takes place at the bank level.
Right.
It's a very important statement. What it means is that in the last couple of months, what we have seen in the bond market, the price was higher than what it was expected. It was thought to be around 6.3, but it has gone up to 6.5, 6.5, and so. Though the determining factors are different,
Right.
it has hurt the sentiments in terms of the interest rate on deposits. So as a result, the statement of RBI in the current context will be very important if they're able to control the liquidity and also intervene when there is a requirement. There would be a possibility of bond rates to mellow down.
Right.
If that happens, overall in the sentiment, the interest rates on deposits also will get benign. In which case, there will be a more opportunity for us to moderate the MCLR.
All right.
Nevertheless, the current rate cut, we'll take it and discuss in our ALCO.
All right. That's a very interesting point. If you can help us understand, when is the next ALCO meeting supposed to happen, and by when can we hear from Punjab National Bank on that front?
It is at the end of the month in terms of Punjab National Bank is concerned.
All right. Sir, before I let you go, I also have to ask you about the commentary coming in from the RBI on their growth estimates. We've seen that the RBI has revised the FY 19-20 growth downwards to 6.1%, while in the policy they have maintained that the risks are there are risks to the downside, very limited risks to the downside. One also have to keep into account the kind of global scenario that is there, and they are also looking at pegging, down the GDP for the further quarters as well. So how are you looking at the kind of commentary coming in on the growth estimates?
First, you look at 6.1 estimate as against 6.9 is a mathematical calculation, because what has happened so far and what is left in the residual of the financial year, by adjusting, they have given the figure. Now, more importantly, beyond that, what we have to look at is the structural changes what the government has done in terms of the tax reform,
right,
is going to create a positive impact in the market. Already it has created a positive impact. Now, further to happen and get translated into economy, it takes little amount of time. So, if that happens, again, there can be a positive estimate to the GDP. As a banker, what we look at is the growth in terms of the credit in Punjab National Bank. We are looking at anything around 11 to 12%, with an expectation that the whatever structural reforms the government has introduced, we expect investment to take place in the infra segment from the private parties, as well as government also to intervene in terms of the investment, which will create the scope for further improvement in the growth.
Right. Mr. Mallikarjun Rao, let me also ask you, the RBI and the monetary policy today has also raised the loan cap for microfinance companies, the borrowers for that, and they can lend about 1.25 lakh rupees per borrower. What kind of impact do you see this is going to have for, this sector, for the microfinance sector?
It will be a good proposition. The reason is, in our economy, in our country, NBFCs and MIFS are going to stay for a longer time. They are part of the economic system. When they are part of the economic system, last time if you look at NBFC's case, RBI has increased the per borrower limit from 20 to 25%. Similarly here, when they have touched upon the microfinance institutions, the probability for the banks to lend more to those institutes will happen, and as a result, the further lending by the MFIs into the economy, into the micro borrowing will increase. This is going to create a wonderful opportunity in the economy.
Okay, that was that big exclusive conversation with PNB's MD, the new one, by the way. Sunil Mehta, of course, has moved on from that post. But we'll do one thing. We'll take a very quick break right here on the show. Do come right back. Before I let you slip into that break, how can I not remind you about what we have lined up on the Money Show today? Yes, the RBI has cut the interest rate, but at the end of the day, what you're interested in knowing is how it's going to impact your wallet and your money. So that's what I will be discussing today on the Money Show. And also a very interesting conversation lined up with Preeti Rathi Gupta of Lakshmi to talk about her journey in the financial space, breaking that glass ceiling, and also, of course, why it's very important for women to take charge of their own finances and how can you do so. All of this lined up on the Money Show. Okay, Ashna, my colleague, is in conversation with Rajiv Kumar, the Ayog. Listen in.
I want a quick comment on the RBI rate cut that is announced today.
The best thing that they could have done, and they've been bold, and they've been forward-looking, and this fifth rate cut, straight rate cut, I think indicates that RBI is now taking growth concerns very seriously, and I'm hoping that this rate cut will spur investment by bringing down the cost of capital in the country.
Right. So one shocking thing that came to be known today was that they have also revised downwards the forecast with respect to the GDP growth rate. What is your comment on that?
My comment is that I hope we'll prove them wrong, and that the second half will be much stronger, and all the steps that the government has taken in the last couple of months will begin to have an effect and impact in the second half of this year, so that their own expectation, I think, will be proven to be a bit pessimistic.
All right. So basically, you are suggesting that we should pin the hopes on the third as well as the fourth quarter.
Yes,
right?
absolutely.
And what about the second quarter, sir, which has just ended?
We'll see how it comes.
All right. Many thanks, sir. Thank you.
Okay, quick and crisp conversation with Rajiv Kumar. But unfortunately, with that, we're out of time, so we'll wrap it up. Thank you so much for watching.